This is a big company for Monish Pabrai. Now, does that mean it's a good buyer? I don't know. When you overpay, it takes a long time to recover. So maybe it's not so bad, Mo. All right, guys, Micron today. Good old Micron. This is a big company for Monish Pabrai. He loves this company. He talks about it a lot. A big chunk of his portfolio is in Micron. Now, his portfolio being one of his funds here, but it's an interesting company. The reason I like it so much is because of the chart. This is the all-time chart for Micron. It's all-time high in 2000. What was that, Mo? Like $85 or so, and it's currently trading at $63.70. Hit a low in 09 of around $3 a share, and then hit a peak recently of $98 back in January of 2022, and now it's back down to $63 a share. So this company has done nothing in 23 years from a stock price perspective. But don't worry, this is the only reason I bring this up is to show you that when you overpay, it takes a long time to recover. So let's look at the financials from back then.
95.50 back then.
95.50 was the high?
Yep.
What date?
July 16th.
July 16th. My parents' anniversary.
No way.
But they weren't married at that time. They were divorced. So back in 2000, their revenue was $3.5 billion with profit of $500 million.
Today it's $23 billion in revenue with $1.6 billion.
So triple the profit,
Yep.
almost seven times the revenue, and the stock price is lower than it was.
Amazing.
Stocks in the short run are a voting machine. In the long run, they're a weighing machine. This, by the way, guys, pretty much every company, except for astronomically growing companies that just went up like 100 times in revenue, they've seen the same thing happen back to 2000. And the stock went from $95 down to $3. $95 down to $3 in 2009.
That's amazing.
3. Look at that's a bigger fall than Amazon did. Amazon went from 113 down to 6.
Yeah.
$95 down to $3 a share.
Yeah.
Guys, and that $3 a share was a mere 9 years later. It's crazy out there. So let's go take a look at Micron now. Now, obviously, this is look at their revenue. Mo, look at this revenue drop.
Ooh.
Yeah.
That's big.
And we talk about this, guys. We talked about this with all the things that were COVID related and the big spike in chips and how much demand was going to increase. And it was a big drop from that time. Let's look at quarter to quarter. Quarter to quarter. This same quarter, $3.7 billion. The same quarter was $7.8 billion. That's a fall of 50%, over 50% drop.
And the last 4 quarters declining. Last 3 quarters
Does that mean
declining.
Does that mean that Micron is doing terrible?
No.
Not necessarily.
It could, but
our thought is the chip industry, everybody in the chip industry has seen a fall, basically. Even NVIDIA.
And they saw an incredible rise.
Did NVIDIA have a fall? Let's look at NVIDIA.
Yeah, probably not.
They had an incredible rise, you're right. So quarterly on NVIDIA.
NVIDIA is the untouchable.
They dropped 20%.
Did they?
Yeah,
Wow.
20%, not 50%, but 20%. You know, there are a lot of people who love Micron, and we're here to just take a look at it. Mo, before we go to the 8 pillars, can you tell us some bull and bear cases for Micron Technologies?
Sure. So yeah, like Paul said, this is a big Monish stock. This is our analyst. He
Dalton.
loves this thing. So Value Line's consensus earnings per share for the next 4 to 5 years is between $12.80 and $18.50 a share. PE of 4.1 times.
Let's look at what analysts are saying.
Yeah, see what they say to compare it.
Analysts are not saying that. They're saying $8 a share here.
Wow. Okay.
Okay. By the way, analysts are analysts.
Exactly.
You know, they have their biases.
And these come from different places, Seeking Alpha, Guru Focus, and just go and see what people are saying. It doesn't mean these are right or wrong. It's just what everybody else is saying. Okay. Samsung has announced 20% reduction in DRAM production.
DRAM.
Yeah, DRAM. And 15% in NAND, N-A-N-D. You know
I
what
don't
that
know
one
what that is.
No? Okay.
Nano
I mean,
drive?
either
No
way,
idea.
it's part of their business model that you would want to at least figure out what they're doing and understand what they're doing in those areas. Micron holds, and this is a big one, Micron holds 26.4% of worldwide DRAM manufacturing.
Wow.
Up from 11.4% in 2011.
So here's a question. Do they
That's
still make
increasing.
computers? My very first good computer was a Micron computer, and I loved it. I loved it so much. I don't think they make computers anymore. Let's see. Micron desktop computers, Walmart.com.
Let's go to Walmart.com.
Doesn't look like it.
These don't look like computers.
Go to the very top. Remember the top? It had like computers there.
Yeah.
Go gaming desktops.
Where's that? Here.
Right there. Is it Micron?
No. No.
I don't see it.
No.
All right.
Okay.
So
line.
that was a computer I owned back in my sophomore year of high school. And remember, I loved this computer and it was awesome for the time.
So they produced the world's fastest graphic chip in partnership with NVIDIA.
Oh, that's exciting.
Yeah.
So anybody attach their name to NVIDIA.
Yeah. Okay, bear cases. DRAM revenue set to decline 11% in 2023. Now, that's where I look at this and say, when does that decline from? Because if it's off of 2020, when you had that insane...
That doesn't even seem like a lot.
Yeah, it seems like nothing.
Considering their revenue fell over 50% from the one quarter to the other quarter.
Exactly. PC, tablet, and smartphone markets are stagnating and becoming replacement markets.
Can I scare you for a second?
I don't believe that.
Look at the estimate for revenue this year, $17 billion. That would still be an even further drop from the 23 they're reporting in the last 12 months.
Yeah.
So guys, this is a prime example of you have a really, really smart guy in Monish Pabrai, a guy with a great track record for investing. And you look at this and say, do I understand this? That's the question. If you understand it and you can make money from it, great. But let's look at some high-level stuff here real quick.
Yeah.
So first off, balance sheet, pretty solid. In terms of $65 billion market cap, $74 billion enterprise value. The difference here is essentially their net debt. So not a ton of debt in the company, all right? And their free cash for the last 5 years is average $2 billion. So they can pay off that debt very quickly. We'll see that next in the 8 pillars. 27.5% gross margin. I don't know how that gets them. What was their gross margin? Because look at their 5-year profit margin. Let's see what their gross margin was in previous years.
I honestly expected more.
Okay, so let's see. No, way higher.
Yeah.
Yeah, their gross margin in previous years, like in 2019 and 2018, it was very high. It was like 60% gross margin.
Yeah.
Interesting. Okay, so this might be a temporary drop in gross margin as they liquidate inventory and get themselves back to some sort of cash flow positive perspective. All right, let's check out their 8 pillars. Oh boy.
Yeah, the ROIC is not the...
Yeah, I'm not worried about that so much because actually, their last 1 year is 2%. With a big drop in profit, they're going to have a big drop in profit, Mo. I mean, look at the net income drop, $11.5 billion in the last 5 years. Cash flow is down $10 billion. Price to free cash flow, 31. PE, 11 over the last 5 years. So there's a lot of, this one really takes a lot of digging, guys.
It does.
Or you have to look at some other metric that can allow you, like maybe price to sales ratio. So the price to sales ratio is 2.8.
0.8, yep.
Go figure, let's see what it was back in 2009. So 2009, the stock was $3, call it 50 cents a share. And in 2009, they had 773 million shares. So 774 times 3.5. That means they had a market cap back then of $2.7 billion. And their sales in 2009 were $5.34 billion. So it was 2 to 1. Okay, it's currently 2.84 to 1. So maybe it's not so bad, Mo.
Yeah, historically. Yeah.
So that's the thing, guys. Look what I just did there. I didn't have profit to look off of, didn't have cash to look off of. It's too hard with all the confusing, but I look at sales and say, okay, if I can look at the history of this company in terms from sales, some sort of ratio with sales, I can figure out when it was fairly valued or what fair value is. Now, let's see what it was here in 2014 at $35 a share. All I do is go to 2014. It was at $35 a share. They had 1.1 billion shares outstanding, so that's $35 billion market cap, and revenue of $13 billion. Revenue of $13 billion. I'm sorry, it was 0.5 times. Reverse. I got that wrong. The previous 2004 one was a $5 billion in sales, $2.5 billion market cap. It was 0.5 price to sales ratio. It's now 2.8. Now, I would think that $3 a share back then, looking at where everything was a pretty low in the market. Now I'm looking at this price to sales in 2014, and you had 35 billion market cap on 13.3, so about today's value, right? So what's 35 divided by 13.3? 2.6. So it's selling for slightly above what it sold for in terms of price to sales ratio back here. Now, does that mean it's a good buyer? I don't know. I really honestly don't have a clue, guys. I really don't. My guess is, based on price to sales, I still feel like, I mean, unless this thing has if the major growth potential that those guys are saying exists, wow.
Then for sure. But I don't know.
So let's go check out the stock analyzer tool. Because at the end of the day, guys, what matters here is what's the future cash flow going to be in the business.
Right.
And the problem we have here before we go further is we have a lot of negative numbers here to look at. So we have to sit there and do a long-term average. Now, this stock analyzer tool was our number one used part of our site last year. 1.3 million times it was used, okay? This, along with all the other stuff on our site, all the tools up here, the retirement calculator, analyst estimates, 8-pillar search, 8-pillar portfolio, the pillar screener, and coming soon, real estate calculator. It's been something we've been working on for a while, and our users have been patient, and the way we're rewarding them is anybody who's part of our community now, and when we release the real estate calculator, we'll get it as part of their package. After that, you new users will not get the real estate calculator as part of their package. It'll be a separate package altogether. So, $7 for 7 days is our current awesome promo. $1 a day, try out the software. You also get this community of thousands of investors who send thousands of messages a day, talking to each other about investment ideas. So, go to everythingmoney.com and check it out. Mo, why don't you do a 10-year analysis and I'll do a 20-year.
Okay.
Now, guys, we're going to put our estimates in. It's probably going to be a very wide range, but we're going to put our estimates in and we'll go from there. So please hang on for 1 second. We'll be back in 2. All right, guys. So Mo and I did a 20-year analysis. Mo did a 10. We have a very wide range of prices because it's okay to have a wide range. And the more you can understand about the company and understand its future, the narrower that range gets. But we look at Micron, it's got a dip in revenue, then it's got to go back up again. The profit and the cash flow are very inconsistent and they differ by a lot. This is my biggest concern. Mm-hmm. I don't like it when profit margin is greater than free cash flow margin.
Big time.
That means net income is greater than free cash flow. I've always said it's a big red flag for me. Some people can be more comfortable with it. Monish is obviously more comfortable with it. I am not. But I'm still going to make my assumptions and go from there. So Mo, for your 10-year analysis, what'd you put in for revenue growth?
So revenue growth, I did 2, 5, and 8. And I did 2 because the contracting chip market, or not contracting, coming back to normal. I think that needs to be factored in.
Now, remember,
2 is extremely low. Don't get me wrong.
2 is very low, but I understand what Mo did. He's only looking at 10 years.
Yeah.
If it takes them 2 or 3 years to get back to its current spot, that eats up a lot of your 10-year growth.
Correct.
Now, with that said, I've read reports that say the chip market's supposed to grow 12% a year for the next 10 years. Yeah. That's all estimations. We don't know.
Yeah.
I did for my low, middle, and high revenue growth assumptions over 20 years, though. 4, 9, and 14. 14 is absurd, guys. However, we look at 14 to the power of 20 times 23 billion, $316 billion. Could I see a world in which Micron, as the number 1 chip maker in the world, gets $300 billion in revenue in 20 years? Absolutely.
The number 1, yeah.
Absolutely. Absolutely. So I don't mind going this high and saying, let me see what it looks like high. Yep. Profit margin. Mo, what'd you do?
I did 16, 19, and 22.
We're very close. I did 17, 21, and 25.
Okay.
I thought to myself, okay, let's say they get their margins better and et cetera, blah, blah, blah. Free cash flow.
Free cash flow, 5, 7, and 9. Went low.
10, 14, and 18. Yeah. All right, PE.
PE and price to free cash flow, I did 15, 17, and 19.
I did 15, 16, and 17, and honestly, Mo, I have no idea why I did those numbers.
I did 15 because I thought it would justify doing 2% revenue growth.
I'm going to change it.
8%, I went 19, I don't know.
I'm doing 14, 16, and 18.
Okay.
Guys, I'm hit the analyze button. The stock's currently at $63 a share. What'd you do for I've got a low of 30, a high, low 30 to 50, a high of 135 to 188, and a mid price of 65 to 95. So it's right in my wheelhouse based on this.
Yeah.
Mo, what'd you get?
13 to 43 on the low end, 33 to 80 on the high end, 20 to 60 in the middle. It's a wide range.
And this is why I have it on my watch list at 45. I'm not enthused to go buy it today, so I'm going to be patient. And when it hits 45, I'll do more research and decide if I really want to own it at 45. So guys, if you like this, everythingmoney.com, $7, 7 days, sign up for our software. You won't regret it. You'll get the real estate calculator along with it. Take care.